Hey, good morning, everyone. Marty Mazzora here, March 25th, 2022, with your weekly economic update. In front of you is our own index. Just got done scoring that this morning for the week and pretty much didn't move. I did consolidate two data points that have become somewhat redundant. So in effect, we now have one fewer data points because we combined two. And therefore, our underlying score didn't change, but it resulted in a move in the index from 18.75 to 19.15. We still have, I would say a noticeable amount of daylight between here and recessionary conditions by our assessment. So let me just run through a handful of the inputs and give you our feel for the overall setup. So I want to show retail sales again, but just because really this one, the Red Book weekly survey, it's more high frequency, obviously, continues to drop. We're not scoring it a negative just yet, but I do think it's worth paying attention to. So consumers, according to this particular metric, are spending less and less on a week-over-week basis. Consumer confidence continues to go down. This is the weekly one here, Langer's. And then we have the University of Michigan's just out, which went down another notch, and we'll wait on the conference boards. But overall, folks are not feeling it, to say the least, with regard to their circumstances. And much of it, according to the survey, relates to inflation and what they believe the prospects are for continued inflation going forward. Now, it's hard to be pessimistic, and I mean this sincerely, when you have these kinds of unemployment claims numbers. We're literally looking at 50 plus year lows on continuing claims. And again, this is not adjusted for population growth. And so back to the not so positive, like durable goods orders rolling over a bit right here. However, rail traffic for about the third week in a row has improved pretty nicely. So pick up in activity across the nation's rails. And then a quick look at commodities, that Bloomberg Commodity Index. Again, we were looking at it here recently as it had rolled over. I promised a lot of chop, a lot of volatility. I think we could easily come in lower than these levels up here. And ease and geopolitical pressure, I think, would have futures traders selling commodities, and it would push this lower, and so on. So, folks, we've benefited notably in our commodities exposure within our core portfolio. But we hold no delusions that we aren't going to experience an intense amount of volatility in the weeks and months to come. We have stepped up our hedging activities a bit in that part of our portfolio as well to try and mitigate what we expect to happen, but we definitely want to be there on a long-term basis based on today's setup as we see it. Last week I showed you the CRB Raw Materials Index. It's not subject to speculators in the futures markets, and so it gets to just be a real indicator of ongoing and continually rising inflation right here. And then last but not least, copper. It's bouncing notably once again. I think ultimately it's a win in terms of piercing this all-time high right here. The amount of volatility between now and then and after that, of course, I think is going to be notable. As I suggested, I think last week or the week before, if I were backed into a corner and were forced to answer the question, what are you most bullish on going forward for the next several years? Well, copper, I think, would probably top the list for all the reasons that we've been discussing herein for the last year plus probably, and will continue to going forward. So folks, at the end of the day, I would say mixed would be the best way to characterize what we're looking at from an economic perspective. From a global perspective, over the last day or two, we've seen flash purchasing managers indices or the preliminary PMIs. And frankly, on balance, it's not bad. I actually anticipated worse. So for the most part, there still is a good deal of optimism globally about the prospects for the economy. And of course, even sentiment will be somewhat volatile as geopolitics, etc., meanders through this inflationary setup, through midterm elections, through the happenings in Europe and so forth. We need to be on our toes, always looking for the opportunities, underneath all the noise, and But I think right now we have to have a serious focus on the risk and defend against something potentially major to the downside. So again, not predicting outcomes here, but just assessing risk, probabilities, etc. Folks, thank you as always for watching and listening. Hope you have a wonderful weekend. Be back soon. Take care. Bye-bye.